I'm glad you brought up B-REIT. B-REIT's a popular institutional investment option for those that are into real estate investment trusts or have, as you said, defined a theory or a
Sure.
playbook that they want to go down. Talking about access to individual components and skewing towards the idea of using a platform like Waterloo through a strategic advisor like Strategic Capital in Austin. Can you talk a little bit about sufficiently de-risking pools of investments, or maybe can you just opine on the idea of whether there will ever be a day or a period in the market in alternative investments where ETFs or other tools are used to sufficiently de-risk whole portfolios for mainstream clients? Can you go down that channel for a little bit and talk
Yeah,
to that?
sure. Yeah, so if you look at the way that institutions allocate, and you can look at the evolution over time, kind of starting in the 60s and 70s when institutions were primarily stock and bond investors. Throughout the late 70s and early 80s, a lot of those institutions started adding real estate as a broad allocation component to what they did. Going into the later 80s, early 90s, hedge funds and private equity became a core part of what they did. And you look at today, the most sophisticated investors out there, which we feel are the institutional allocators, have a lot of times 40 to 50% of their portfolio invested
Can,
in.
can I can I ask you a question along those lines real
Yeah,
quick?
sure.
I don't mean to cut you off, but you say the most sophisticated investors. Is this because the tooling and resources and back office support that they have while vetting investments, or when you allude to that concept of sophistication from the institutional side, what specifically draws you to say something that way? I mean, clearly there's a lot of resources there to a major institutional investor, but can you
Absolutely.
give some nuance to that?
Yeah, sure. So resources are a huge component to that. But when you are a hundred $100 billion institution, the types of resources that you're able to bring to the forefront
Sure.
or your allocators are going to be unparalleled, right? They have access to the best data. They have access to a lot of times the best professionals with
Got it.
fantastic academic backgrounds to be able to go in and really look at their portfolio from an academic perspective to understand how correlations and estimated returns and volatility come together to create a portfolio that is really designed to meet the long-term objectives of that organization. If you think about a pension, your investment time horizon, is perpetual, right? You're investing for 100+ years, and that really allows institutional allocators to think outside the box without having liquidity as a constraint to what they can do in their portfolios. Individual investors, they are constrained by liquidity. Ideally, the average families are, they're saving for, retirement that's, 30, 20, 10 years away. And, you have to solve for liquidity to make sure the cash will be available to meet the needs of the client. And so as we look at how institutional allocators allocate, they do have a heavier allocation to alternatives. And the retail investing community has come a long way in regard to alternative allocations. I think, REITs and private real estate, are now a component of more and more investors. There's a comfort there. People understand conceptually what they're owning and how they're, earning income off of those types of investments. And, while there's some correlation with the public markets with, public and private real estate, it does provide a nice diversification component to portfolios. Does provide nice, inflation protection, and so it can serve a very important part of portfolios. And other types of alternative strategies can play different roles in portfolio construction. We really try to define our alternatives to our clients into one of two categories: either return enhancing investments, thinking about it, investments that ideally will have a higher anticipated rate of return compared to public market investments. And secondly, risk reducing investments. These are either going to be lower volatility strategies, they're going to either be more stable income strategies, or just strategies that have less correlation with public market investments. And it's our job as an allocator to go through and determine what's an appropriate allocation to create a portfolio framework that's really designed to help our clients achieve their long-term goals, ideally with less risk, in a portfolio that has ample liquidity to be able to meet their needs. That's really all we're trying to solve for.